Good morning, ladies and gentlemen. My name is Vasil Dikov. I'm a Senior Account Manager with GDMFX, and I'll be bringing you today's morning outlook. We'll start with the North American markets. The existing home sales for the month was 0.03 million, better than expected at 5.3 million. The existing home sales change for the month was 1.6%, better than expected at 5.1%. The 10-year note auction was 0.13% weaker than the previous. And it could take Canada's economy more than 3 years to recover from a shock caused by low oil prices, Bank of Canada Governor Poloz told the Senate Banking Committee on Wednesday. The comments were the most specific the Bank of Canada has made about how long Canada, a major energy exporter, will need to fully adjust to sharp fall in oil prices that prompted the central bank to cut interest rates twice last year. The Dow Jones was 10 points up yesterday, the Nasdaq was 15 points up, and the Dixie was up to 94.52 from 94.16. The US dollar dropped with 50 pips versus the Canadian dollar. It gained 90 pips versus the Swiss franc, and it was 65 pips up versus the Japanese yen. Today we'll be waiting for the initial and continuing jobless claims, the Philadelphia Fed manufacturing survey, the housing prices index month-on-month, the CB leading indicator. Moving on to Europe and the European markets. From Germany, the producer price index for the year was 0.2% weaker than expected. The producer price index for the month was weaker than expected at 0.2%. The 10-year bond auction came in with 0.15% as previous, and it came out at 30%. The ZV survey from Switzerland, the expectations for April were up to 11.5 previous at 2.5. The first topic we expected Draghi to speak about is negative rates in the ECB monetary policy report. Markets want answers to the change that sub-zero rates are doing more harm than good, squeezing bank profits rather than bringing them to lend. We're looking for confirmation that the ECB's main policy focus is supporting credit creation via the targeted long-term refinancing operations for the banks and corporate bond buying programs, details which could be announced on Thursday. If markets are reassured that the ECB will only lower deposit rates further in the event of a deflationary shock, Eurozone bank shares may recoup some of their near 20% year-to-date losses and regain some of their confidence to lend. Easier financing conditions and stronger credit demand could eventually follow, boosting Eurozone consumption, business investment and earnings along the way. The DAX 30 started with a down gap of 63 points and ended with 130 points up total. The CAC 40 is up with 70 points. The euro was 133 pips down versus the Canadian dollar. It was down with 53 pips versus the US dollar, and it was down with 74 pips versus the Australian dollar. Today we're going to have the ECB interest rate decision, the ECB deposit rate decision, and we're also going to have the ECB monetary policy statement and press conference. Moving on to the United Kingdom and the UK markets. We had the unemployment data, climate count changed 16.7 thousand, weaker than expected at 6.7 thousand. Climate count rate came out at 2.1%. The ILO unemployment rate was 5.1%. Average earnings, including bonuses, was 0.5%, weaker than expected at 1.8%. The average earnings, excluding bonuses, were at 2.2%. The UK labour market may be showing signs of a cool down as data showed unemployment rising for the first time in 7 months. Wages, including bonuses, also took a dive with 0.5%. This has provoked speculation of a possible interest rate cut from the Bank of England. As a result, the sterling halted its 3-day run against the greenback. The FTSE 100 gained 35 points. It closed at 6,362 yesterday. The pound was 135 pips down versus the Canadian dollar, 95 pips up versus the Kiwi, and 75 pips down versus the Australian dollar yesterday. Today we're going to be waiting for the retail sales excluding fuel for the month and the year, and we're going to be waiting for the public sector net borrowing data. In Japan, we had the foreign bond investment 2.020.8 billion yen, more than previous at 844.7 billion yen, and the foreign investment in Japanese stocks 392.1 billion yen, more than previous at 538.6 billion yen. Japan shares were rising on relief that the yen weakened overnight. The currency was last trading about 109.75 to $1 US, which lifts pressures of exporters who would benefit when a weak currency makes their products more competitive overseas. China shares were choppy Thursday in a tug-of-war between rising spirits over fresh liquidity and disappointment over a signal that authorities could pull back from monetary stimulus. Chinese officials may announce the approval of the anticipated stocks trading connection between Shenzhen and Hong Kong exchanges in the next 2 months, according to people familiar with the matter. The connection of Shenzhen to Hong Kong would come after the Shanghai-Hong Kong link and will let offshore investors access many of China's technology and high-growth shares. Premier Li Keqiang said in March that the country will seek to start the link this year. The exchange expects that a preparatory period of 3 to 4 months will be needed following the announcement of regulatory approval. China suspended new registrations on finance companies nationwide as authorities started to crack down on internet finance. Business magazine Kexin reported, citing unidentified people familiar with the matter. The Nikkei 225 was up with 260 points and 1,047 since Monday. And moving on to the commodity section of the market, the crude oil stock exchange increased by 2.1 billion barrels for the week ending on April the 15th. Crude prices steadied after earlier declines on Thursday, as the International Energy Agency said that 2016 would see the biggest fall in non-OPEC production in generation, helping rebalance a market that has been dogged by oversupply. Despite the EIA comments, statements by Russia and Iran on Wednesday weighed on the market. Russia's energy minister said that it might push oil production to historic highs to over 12 million barrels per day, just days after a global deal to freeze output levels collapsed and Saudi Arabia threatened to flood markets with more crude. Meanwhile, Iran, determined to regain market share following the lifting of sanctions last January, reiterated its intention to reach output of 4 million barrels as soon as possible. Gold prices gave up early gains on Wednesday as firmer US dollar weighted while silver rose to 11-month highs. Silver has now gained 23% this year compared to gold almost 18% rise, with more than 50% of silver demand coming from industry prices have been boosted by recent indication that China's economy is stabilizing after a turbulent start to the year. The S&P 500 index had a range of 19 points, it is at 2,101 right now. Gold had a range of $16 at 1,250 now. Silver had a range of 40 cents up to 17.33. Crude had a $3 range at 44.22 right now. And natural gas is trading at $2.05 at the moment with a range of 8 cents. On Thursday, we're going to have the EIA natural gas storage change, and on Friday, the Baker Hughes oil rig count. That is all for me. Thank you and have a nice day.